This conference will now be recorded.
Good evening, ladies and gentlemen. Closing Trading Frank. It's approximately 9:43 p.m. on August 25th, 2019, Sunday evening. Globex futures are trading. We are down approximately 23 S&P points, exactly as alerted and forecasted on the SPY puts that were repeatedly alerted on Friday as we broke on a technical basis. You can see that behind you on the screens right there at around 10:45 a.m. on the hardcore tweets coming out of what I call the Trump crash. And this is where we are right now. We are bouncing Fibonacci levels. We're going to go through that in a couple of minutes. Full disclosure, this is purely for financial education, not for any solicitation or advice. Session will be recorded, uploaded to the Google YouTube channel, Clueless Trading, and everyone can listen to it, hopefully prior to trading tomorrow, so that they are prepared to make some real money. Because we have been making some pretty serious money when it comes to trading these tactical charts, both long and short. On that note, quick shout out on the Instagram channel. Our Instagram channel is starting to really gain traction, and Facebook should pick it up. Facebook owns Instagram, and above 600 followers, which is just a little slingshot away. We should be moving up to 1,000 followers on Instagram, and that will be great for promotional marketing purposes. Keep in mind that the Instagram channel is not for real-time alerts. The real-time alerts are always on the Twitter real-time feed, as you all know. And Instagram channel is only there to highlight some of our bigger trades and all the big things that we do during the day and during the week. That's it. On that note, let us begin. So, nobody's around. It's fine. It's a beautiful summer evening. In fact, it's one of the most gorgeous summer evenings, almost like a touch of fall, here on the New Jersey, Jersey City waterfront, overlooking New York City and Statue of Liberty, where I live, and where Command Central is. And that's not a problem, because the whole thing is about information and delivery of forecasts, and that is what I am doing tonight. So first of all, I don't need to explain anything. More importantly is what the Fibonacci retracements are all about. This large, thick blue line is the Fibonacci 50% retracement. We broke that. We went below that. We tried to hold this is the month of August. Right there. This is the month of August. You can see that. August is down here. You can see the intense volatility. One of the sessions that I did today for my paid ACS Advanced Coaching Session members, this morning, I highlighted and explained the Fibonacci retracements and how important they are to our daily and our swing trading purposes. What does that mean? In simple English, we keep a lot of money in our pocket, we lose a little, and we make back a lot. We are in a technical breakdown, period. And I will repost both that session, and hopefully the paid ACS members won't mind. I will ask their permission first, and as well as tonight's session. We are on a technical breakdown. There's no question about it. All right, and the fact is that beyond that, we do get reflex bounces, and that's what we're getting today. We are down 23 S&P points, which is really not that bad. This is where the month of August started. Right there. And this is nothing new to you. I've shown you these charts many, many times. It's how you manage your profits and how you do your trading is what matters. So I'm just trying to help. I'm just a faster messenger on the markets. So bottom line is, this is the level that we want to buy very heavy, which is 27.76. Doing a quick calculation, right now we are at 28.32 minus 27.76 is 56 And this would be technically a beautiful area to go in hard. This is 56 handles, right? 56 handles on the E-minis or the S&P SPX. Let's just put it that way. Keep it simple. Multiplied by roughly 8, which is the higher of the numbers for the conversion, the Dow Jones Industrial Average. We are looking at roughly 400, another drop of 448 points. Let the world freak out. Let the media go nuts. Remember, net overall, I'm a bull, even though we have a big crack. I want to remind everybody, I said that very clearly on Friday. We have a big crack on the longer term picture because of reasons which we already know. The escalating China war, President Trump going absolutely bonkers on our Federal Reserve chairman, calling him the enemy of the state. And who's the bigger enemy? And those things don't, to me, hey, I'm a business guy. Hey, Jody, how are you? So, so that those things from we're in the business of making money. We're not in the business of making political decisions. So those things in my mind are extreme negatives on the market. That's what I put out through on Friday, and people who followed me on my repeated SPY short trades through the puts made a significant percentage of money, anywhere from 200 to 400%. Those are not small numbers. So even with small amounts of money, you can make a lot. That's all. So 448 points would be the ultimate buy zone right there, around 2776, which is around 2780 or so on the S&P 500, which brings us back to where we were around the 4th and 5th and 6th of August. And you can see that very clearly. That would be a massive, massive. This is the bull channel that we were climbing. Then we broke. We were going up after the Federal Reserve Jackson Hole speech. And then came the big attack on Fed chairman and the extra and the comments on the U.S.-China trade war out of the president, and this is where we are. We had multiple news things that came out over the weekend. I have put them out for all of you to read and understand and do what you need to do with it over the weekend, but it's not the news that drives the markets, it's the reaction to it. The reaction is always on technical levels. So this big fat red line was the low around the 15th, and this is exactly where we are bouncing off from. Futures were down about 40, now they're down 25, but we are still in a downtrend. I would be tactically inclined to be short biased at this point unless we see this big fat red line over 2866 on the S&P 500, which will determine every single trade, stocks or so, that you do on the front end to react. If we cross over the 2866 level, write these down. Believe me, it's going to make you more money. That's just what we do. I'm not in the business of preaching. I'm in the business of making money. That's what pays my bills. That's hopefully pays your bills. And if you're just doing it for fun, that's going to make you extra money, period. So this is the big red line, the border. If we cross this, the markets are going to bounce pretty hard towards the 50 Fibonacci level, which is this thick red line right there. You can see it, 2902. And we shall see what happens after that. I will tell you, guys, all of you, all right? This is not grandpa's market. I've said this many, 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 many times. I will say it again. I want to keep this simple. We are on a technical breakdown. Now, will there be massive reflex bounces? Absolutely. Absolutely. One tweet out of my good friend, New York, and believe me, I've dealt with this company many, many years ago on Wall Street. I understand how Donald works, okay? But the poker game means that we need to react to situations. All I know, one big tweet out of him saying, hey, I might, he kind of mentioned that at the G7 meeting in France. that he's having second thoughts about really escalating the tariffs, and he increased the tariffs more by 5 and 10%. Read my tweets over the weekend. And he said, oh, might be having second thoughts. Yeah, I think I'm going to, these guys are really coming to the table. And China, in the meantime, is being a stubborn mule, and they're fighting for their national respect. That's what countries do, right? So bottom line is, we could easily jump up 3, 4, 5, 6, 700 points. We're going to look at a couple of charts. And at this point, let me just put it this way. There will be stocks that will fight this market and go higher. And I will always keep on highlighting them. Whether it's Boeing, which is one of my favorite stocks. Told you guys to buy Boeing. They were up almost 600 to 800% in 3 days. People who followed me made a lot of money. And Boeing was still positive at the end of the day, despite the massive drawdown of 733 points, if I remember correctly, on Friday. So Boeing, the certification is going through in October. That's what the news is. And if the 737s start flying, the rest of the business are doing fine. It's a great American company. You want to buy the crap out of it. So that's it. So this would be the ultimate buying point, 448 points down. Will it happen? I have no idea. I will follow my charts. So this is what's happening right now. And so let's zone in. We crashed after hours, which is exactly what I thought. You're still going to make a lot of money because we have the SPY to, let me see here. We have the SPY 284 puts expiring on Monday, the 284 puts. And right now, net, we're below that. That means you're going to make money one way or the other with futures down 23. Now, can futures be positive by the end of by the morning when we wake up? Yes, one tweet can do it. That's the way I look at it. But technically speaking, this is where we are. We're bouncing up over the major inflection level right here on the 15th of August. You can see that right there. And this is where we closed at on Friday at around 28.51. And Friday was the 23rd. Yep, right there. So is it possible that we close flat, open up flat for we open up flat on Monday morning? Absolutely possible. Absolutely possible. In that case, you will basically be flat to losing money on the puts that you have, that I have. That's the way it goes. Do I think it's going to happen? I think it's a low probability move, but I don't control the markets. I could actually stop the webinar right at this point because it's pretty clear what's going on. Let's take a look at a slightly longer term picture. This is where we are. In my opinion, what's happening right now is there is intervention in the foreign markets. Asia's open. I believe that there's an invisible hand of the government, of the PPT, which is the plunge protection team run by the Federal Reserve to protect the US markets. The PPT, Google it, learn the history of the PPT, and PPT could be at work right now. If the technicals control the market 110%, we would be around 27.30 right now, which would be significantly lower. But this is where we are. We have a we have a green candle, and that's why the futures have jumped up from down 40 handles to only down 23. Everything in life is relative, and the bottom line is this is what we're doing. Lots of great charts were put out there at the end of the day, and I suggest that any of you who have any inclination to further your trading career and actually make money instead of being scared all the time, and freaking out. Maybe you guys have trust funds. I don't. Should look at each one of these charts. This is the daily chart right there, showing you what is going on. We closed at 28.56. We're at 28.31. We are slightly down right here somewhere, right here somewhere. This is the trading range, 29.61, 26.18. If you don't like numbers, don't be a trader. That's all I have to say. If you don't like numbers, numbers make money. Your thoughts, your opinions, and what you feel doesn't do anything. Just want to be very direct, very clear. Okay? So technically speaking, this would be the ultimate levels to buy. If we slip and slide and there is a further escalation, we don't know what's coming out of China overnight. They might react to the enhanced tariffs on the tariffs that President Trump has already put on them. And there was nothing really good to say. The Chinese official newspapers were already, which are the mouthpiece of the Chinese communist / capitalist government, were already saying that China is ready for a prolonged war. Listen, China is not a mortal enemy. It's an economic enemy. But US business is starting to get very, very worried. So regardless of your political affiliations, keep in mind, we are a global economy, whether you like it or not. The United States of America is not an isolated island. 90%, 80 to 90% of the US GDP, gross domestic product, that means in simple English for people who have no idea about economics, GDP, which means your income, a nation's income, our income, comes from multinational companies because we make some of the finest goods, aircrafts, technology, biotech, agriculture is sold to the world. One of the biggest customers, if you want to look at it from a shopping mall, is China. So you want to cut out your biggest customer and say, okay, see you later. I don't want you. Then this income drops. It's really as simple as that. I'm a business guy. And I want to make America great through business, not through political BS. That's always been my goal, and I've always said that. So whether you like my thoughts or not, I don't give a flying, whatever. So 80 to 90% of the S&P 500 companies that dominate American business, that what makes America great, rely on their income from selling overseas because that's where the world is growing. So you want to cut out your biggest customer and completely put them out of business so they don't buy anything from us. What do you think is going to happen to this 80 to 90% of your income? It's going to go down. That's it. Simple. Now, this is the longer term chart. Technicals are never a perfect science. They are art. So we could very well, there's a uptrend line here. And this is what's happening right now. We're bouncing off that. So we could very easily bounce into the 2,904 level, which means 300 to 400 points up real fast, real quick within 24 to 48 hours. Ladies and gentlemen, I just want to make something very clear, and please listen carefully. I do care what my members do. I do care what my traders do. You guys don't work for me. I don't work for you. You guys don't pay my bills. You don't pay my bills. Okay? We are independent traders. I am showing you intense tools to make a lot of money over a short period of time because we are aggressive options traders and we recommend stocks. Now, if you want to be a crybaby, you change your own diapers because I'm not going to do that. I work very hard during the day, and I'm not looking for compliments. You're a great guy and not, because only God will determine if I am a great guy. You guys don't. So I want all of you to grow up and start to learn how to be a real trader. This is not an easy business. If this was an easy business, every single Joe Schmo, welfare recipient, lazy bum, not every welfare recipient are lazy bums, would be a trader. But no, it doesn't work like that. So instead of blaming the market, blaming me, blaming President Trump, blaming this and that, why don't you get working like a real, work for a living when it comes to trading? Enough of the BS excuses, enough of texting and DMing and all that garbage all through the day, because I don't control the market, but I'm showing you trades that are mind-boggling. And any one of you who are not following the Instagram channel, and I know the people who are not, okay, you're doing yourself a disfavor and hurting yourself, because I'm highlighting some of the biggest trades that we have done so that you can be in the next big trade. So what is going on right now in the real world? Billions of dollars going to play. We are bottoming. That's a good sign, because once we bottom, we're going to have a phenomenal face slashing short squeeze rally, which I have shown you guys many, many, many times. We would all love the market to crash and burn with a lot of cash on the sidelines down to the 27 level and buy the crap out of the market. Maybe it's going to happen. Question is, it's happened twice before. Once in March, once in June, once in early August. Will it happen again? I don't know. But if it happens, don't sit on your butt and make excuses. Buy the crap out of the market. Long term, even though there are cracks in the bull market because of all these different political stuff going on, I am still a bull. I believe in America. I believe in American exceptionalism. I'm a product of it. Maybe some of you guys are not. Waving a small flag, like I always say, and screaming, "Make America great," and wearing a hat doesn't make America great. What makes America great is American business. As long as American business flourishes, we're fine. When American business dies, we're done. So that's it. So this is where we are right now. Pretty good. This is the big. These lines were drawn well before this whole fiasco that happened over the week. This is your big breakout level right there. Big fat green line. A child can read this chart. So that's exactly where we are bouncing off. Now, realistically speaking, I would like the market to retest 2800 and probably slip a little bit more, scare the living daylights out of every single trader, investor out there, every single fund manager who is short the market, and then we basically kill the shorts. Because I want America to win. That means the stock markets to win, ladies and gentlemen. So wake the F up, like we say in New York, all right? So a little bit down would be great. Do we bounce from here? Maybe, because this is the level where the markets broke out of back in March. You can see that. And if you can't read charts, seek help. I have unbelievable amounts of resources on my Google YouTube channel. Sign up for the advanced coaching sessions. New members like George, who's attending tonight, he's been getting free complimentary sessions. What more can you ask for? You want me to write you blank checks out of my bank account? No, I'm not going to do that, because I'm not going to feed your bad habits. And I don't give out welfare. I want people to work for a living. So that's it. Now, this is bad. This has not fully oversold yet. So we're going to see some severe volatility. George, I'm not rambling. I'm talking. And if you don't like it, get the heck out of my service, all right? Because I don't ramble. I'm showing you guys real stuff and the mechanics behind the market. All right, George? So your comment is an insult. You have no idea what I've done for my members over the years. So there's another new member who has no freaking idea, says I'm rambling. Okay, let me go straight to the point. So this is your daily chart. Let's pull out the weekly chart to see what kind of technical damage we might have had. And by the way, that guy, I worked with him on 2 sessions and I helped him so much, and he says I'm rambling. Unbelievable. You know, in New York, we take those guys out and we fire him. So this is where we are right now on the weekly charts. As you can clearly see, keep it real simple. The internals have still not bottomed. They are surging down. And sometime this week, hopefully, we reach those levels around the 2,800 or so um, that we need to bounce from. And that would be the ultimate buying point. You can see that internals are still suggesting, as I like to say, that we are coming down. And that would mean that around the 2780, 2800 level, which is where most probably we are going to get to. But I don't know. We could be hitting this major support, and it's very possible that we bounce from here. Whichever the case, stay tuned as the market opens tomorrow, and then we move from there. Let's take a look at the S&P 500. And let me pull that down here, ladies and gentlemen. And this is what's going on. All right, so keep this in mind. This is the 1 hour chart. You can see there is a heavy pattern symmetry. This is Monday. What day was that? Where we reached a low. This was, you can look at the dates up here. This was the 5th of August, the first part of August. That's exactly where we hit. Well, we didn't hit that yet. That's 2780. That's the one I was telling you will be the ultimate buying opportunity. We hit the level we reached on the 15th, the middle of August, the last critical low. That's exactly where we hit. This is what the market's doing. If you remember technical patterns, we fell hard. Now we're bouncing a bit. Jody, what pattern is this when it goes like this? We know what pattern this is. That's a bull flag. What's this, Jody? What we're doing right now.
Bear flag.
Exactly. So technically speaking, it's still a bear flag, sir. So unless we break out above, again, it's a very dynamic market. We're very oversold on the 1 hour chart. On the 1 hour chart, we are very oversold. You can see that starting to curl. So we could very well have a bounce. I wouldn't be surprised whether it's a tweet, whether it's some other positive comment coming out of the White House, or even saying that Chinese delegations coming here next week, the next 2 weeks, that we open. This is where we closed that. This is where we closed that on Friday, that we closed, and we, instead of being down 22 and a half S&P points, that we close, that we open up flat. Could very well happen. We shall see. If this starts to turn around really hard, we are going to hit again. We're going to have at least a 200 to 300 point rally. But as you can see, and you can see that on your own platforms, that we are at some inflection levels. That's where the bounce is happening. Still a bear flag. In my opinion, even if we get up here, we will still retest the lows. One of the things I mentioned to my ACS students this morning, that what we'd like to see is a triple or double bottom. So if we move up and then we come down, create a double bottom, that's when you want to get in long, and of course follow my tweets, and then make a decent sum of money. One strike touch on a critical low, like was on August 15, does not create a full bottom. We'd like to see a double bottom. a double bottom would be a big signal to buy. So that's really what's going on, guys. All my charts are, and please review all the charts that I put out there. I am net negative on the markets right now based on what I see on the longer term charts, which I'm going to show you the weekly. The weekly chart is bouncing off. You can see that right now. Right there, we have let me take all the lines out so you can see it. Moving averages. This is your 50-week moving average. This is your upper Bollinger. That's your lower Bollinger. Right there. So what we're doing is we are bouncing off the 50-week moving average, and that's why you have a small hammer like a T. However, if you look at the internals, and that's really what determines the health of the overall market, we are still moving down. MACDs crossover down. Histograms are pushing down. So I would play the reflex bounces, but I would sell very quickly on any reflex rallies unless certain levels are broken higher. For example, here we have the 34-day moving average, which is at 28.25. If we break above that, rest assured the market will attempt to go back to around 2,900. On that note, end of story. No rambling, straight to the point. Follow the tweets. There'll be individual stocks that are going to make us a lot of money. Boeing is one of my favorites. All the charts are there on the Twitter feed. Jody, do you have a quick question, sir?
No, I don't, Frank. I think you're pretty got to the point here. So
Right, because
I'm ready for the week.
that's what I like to hear, sir. Because your energy and your education that you have learned over trading education over the past 2-3 years that you've been with us should be a testament that anybody can, with a little bit of focus, can be a really good trader. And I admire you for that. And I mean that. A lot of respect. So God bless you. God bless everyone who's going to listen to this session. And that's the way it goes. We have to be flexible. We have to move fast. Keep position sizes small. And last thing I'm going to show you is a very long-term chart, which is the monthly chart. And the monthly chart, honestly, is not even that damaged because this is the 220-month moving average, and that's exactly where we're bouncing up from. So regardless of all the fiasco from the tweets and the Chinese being stubborn and saying all kinds of tough stuff, all that stuff, the way I'm looking at it is we are still on a track to go higher. But short term, one thing you have to keep in mind, which is a bullish event, which is Labor Day weekend. I have never shorted going into the last couple of days of Labor Day weekend. Just don't do that. So we just want a quick sharp pullback. We have 24 S&P handles down. Going to make it decent. You have a couple of puts, Jody, hopefully?
Have what?
You have a couple of...
I got some puts, yep.
Nice. Nothing crazy, but you have some puts, correct?
Yeah, 286.50, I believe, on the SPY.
Okay, so I basically rolled those out and I went into the 284s. Those are going to make money because futures are down 24. And Jody, you should teach a session sometime. I'm not stroking you, but that's serious. No, because you know why? Sometimes people need to hear from somebody who's a member instead of me. So great job, because I was very forceful on Friday when the technicals broke that we need to go short. I said reduce positions, get out of long positions. Swing charts will work. I still have some swing positions on some of the biotechs and stuff. Got out of all the techs. And we still made money for the first part of the day as they were going higher. So the bottom line is that those puts are going to pay very handsomely. Be quick to take the profits. See the reaction of the market as the market opens tomorrow morning. And like I say, we don't control the markets. This is the 5-minute chart. This is where we are. It is still looking like a bull flag. A double bottom would be a perfect buying opportunity, which would be around 2,800. 28.10. I would love to be a big buyer at that level. And if the dam really breaks, then we are looking at 27.50 or so. But just from technical analysis, as I've taught people over and over again, this is still a bear flag. This is a bull flag. This is what a bull flag looks like a franc, right? This is what a bull consolidation looks like. This is looking still like a bull flag. So even if we go up to 28.41 or even close, come close to being only down 10 S&P points in the morning, the chances are there will be sellers in the morning. Why? Because there's a lot of mom and pop investors who buy ETFs, right? Exchange traded funds. They'll be like calling up the brokers first thing on Monday and say, listen, get me out and put me in the money market till all this turbulence subsides, right? So they'll be, you might pop up at 9:30, 9:45. By 10:30, expect selling. Now, if it doesn't and the bull flag breaks out, I'll be the first bull, as you know, who's going to be saying buy, buy, buy. On that note, God bless you guys. Jody, you're the best. There are many members like you and
Thank you, Frank.
new members like me who try to insult me by saying you're rambling, Frank, have no idea who I am, and I don't blame them. So hopefully they see salvation, trading salvation on their own right. So have a great one. Good night, guys.
Good night, Frank.